Capital gains tax and wealth inequality. Have you ever wondered how taxes on investments can impact wealth distribution in society? Let's take a closer look at capital gains tax and its role in wealth inequality. Capital gains tax is a tax on the profit made from selling assets like stocks, bonds, or real estate. When you sell an asset for more than you paid, the profit you make is called a capital gain. For instance, if you buy a stock for $100 and sell it for $150, the $50 profit is your capital gain. In many countries, capital gains are taxed at a lower rate than regular income. This means that individuals who earn most of their money from investments may pay less tax than those who earn wages. This tax structure can contribute to wealth inequality because it often benefits the wealthy more than others. Wealth inequality refers to the uneven distribution of wealth among individuals in society, and tax policies can play a significant role in this issue. Wealthy individuals tend to own more assets, which means they benefit more from lower capital gains tax rates. They can accumulate wealth without realizing capital gains, allowing them to avoid taxes until they sell their assets. This concentration of wealth can make it harder for others to catch up. Socialists argue that this system needs reform to create a more equitable society. From a socialist viewpoint, one way to address wealth inequality is to equalize tax rates on capital gains and ordinary income. This would ensure that all forms of income are taxed at the same rate, making the tax system fairer. Some also advocate for implementing wealth taxes, which would target the wealth held by the richest individuals. This could help redistribute wealth more evenly across society. Another proposal is to tax capital gains as they accrue, rather than only when they are realized. This approach would ensure that wealth is taxed more consistently, even if individuals hold onto their assets for a long time. By reforming capital gains tax and implementing wealth taxes, socialists believe we can address wealth inequality and promote social justice. In practice, these changes could lead to increased tax revenues, which could be used to fund public services, education, and social welfare programs. This would help reduce economic disparities and create a more equitable society. So, the next time you hear about capital gains tax, remember its connection to wealth inequality and the ongoing discussions about creating a fairer system for everyone.